Morning, everyone. How are you? My name is Omar Mansur from Codebase Technologies. I am the Global Engagement Lead for global projects. And today I shall be discussing with you digital Islamic innovations and how digital can be an enabler for compelling customer experiences in the Islamic finance industry. Um, what during this presentation, what we will basically discuss is how various digital innovations can support and help Islamic innovation, and at the same time, some of the innovations and technology that we have used that is our own to further the Islamic finance agenda, especially throttling them into the digital space. So a little about Codebase Technologies. Codebase Technologies is a global API-driven solution provider that enables institutions, both in conventional and Islamic, to demystify the digital financial services. We have made it an imperative uh, throughout the years that we help organizations, both traditional and digital, to create and deliver innovative experiences across the customer lifecycle. We have a presence over 4 continents, and our award-winning suite of products, which is the Digibank Platform, which is a comprehensive one-stop bank-in-a-box platform that enables and helps customers unlock the true potential of next-generation digital financial services. We have offices spanning all the way from the UK to Australia to South Africa to various parts of the GCC and the APAC region as well. And we have been working with multiple large scale tier 1, tier 2, and tier 3 institutions along the way. And we have worked together with them to co-innovate and unlock their digital innovations. A little bit about the digital Islamic banking industry. The global Islamic financial landscape is currently valued at $2.2 trillion and obviously is growing at a fast pace. Organizations that come from conventional finance have also started to adopt a lot of Islamic finance practices as well, especially due to the fact that Islamic finance has the transparency and is one of the oldest financial protocols that has been used, that has not been altered. So it and within the next few years, it will grow more than just 12%. It is expected that this number could double in less than 5 years as well. And if you can see, geographies such as the Americas, the United States, the UK, Europe, etc., and so forth, have started to adopt digital financial services and financial practices. A little bit about the financial industry on APAC. Let's signal out just the APAC region alone. 1/3 of the total population, that is India, Indonesia, and Pakistan, have the largest footprint. So that is a number to take. Out of 7 billion people in the world, 1/3 of that resides in these 3 countries that are Muslim. One of the major reasons for absenteeism in digital Islamic finance is that uh, they lack sharia compliant products in these markets. There is a very high demand. Unfortunately, not many organizations are able to offer this as conveniently as possible, thusly leading to a gap between the financial literacy and financial inclusion agenda as well. The Islamic fintech market has seen a change in 2020, especially because of COVID lockdowns and urgent need. This is a very true fact because due to the fact that lockdown didn't allow people to go and access financial services when they basically needed it, especially out of that 1.3, 1/3 of the total population is being Muslim. Majority of that 1/3 is people who lack actual financial access, people that come from blue collar backgrounds, or people who come from a certain demographic that relies on a paycheck to paycheck basis. Now, because they are unable to access these financial services, it basically not only hindered their lifestyle, but at the same time, their quality of life as well. Benefits that these 1 billion Muslims in the APAC region can actually benefit from digital Islamic banking and digital Islamic financial services is that they get a a larger plethora of choices that are aligned with individual lifestyle needs as well. For example, you could have a mobile application that allows customer onboarding, or for them to basically onboard and access their basic financial services such as transfers or just basic payments for their day-to-day needs as well. Hyper personalized digital experiences that basically span and um, are contextual for the customer. So you can have basically a mobile application, as I mentioned earlier, that can cater to both blue collar workers as well and the white collar workers as well. At the same time, allow for people from various walks of life to be able to have a contextual experience. More competitive financial services costs. This basically means that because a digital application is far less having a probability to have overheads as opposed to a physical branch or a physical outfit, thusly allowing institutions to be able to offer competitive rates, especially around savings products or transfers, etc., and so forth, or overseas international transfers, which I will get to later on about one of our products that enables overseas workers to be able to transfer money at a very cheap cost with our Digibank platform as well. Increased convenience, as I have mentioned, imagine having a digital bank branch in your palm. You can do everything from opening an account, moving your money from various accounts from current to savings by the flick of a button. uh, Being able to update your documentation, being able to transfer money both locally or internationally, being able to pay your bills with convenience. Also giving alternative access to finance. So imagine you basically open your mobile application. It already has your KYC details because of our Digibank identity platform. And then you can basically repurpose that and take this forward to your credit applications as well, and then apply for your credit products as well. You also provide potentially higher returns because um, customers are able to save on the go as well, and because there is no branches, there is no need for excess or physical overheads and operating costs. You are able to provide your customers with products that you would not basically see with traditional institutions as well, mainly due to an infrastructure play. Increase financial knowledge and literacy. If you can basically understand that 1/3 of the Muslim population uh, accounts for, sorry, 1/3 of the global population accounts for the Muslim population, of which a very large amount of that accounts for people who are not literate in the financial industry and the financial services. However, at the end of the day, if you look at it, each one of them has a mobile application that has access to the internet. And what they are able to do is they are able to uh, still send messages and contact, etc., and so forth. So what basically happens is that um, you make a mobile application just as easy to use as WhatsApp. You make the ability to apply for products and services as easy as operating your social media, and thusly you have now included them in your inclusion plan as well. And at the same time, the more they basically use your application, the easier they realize it is to manage their finances. You are basically providing them with the knowledge that they need, especially around their finances. By providing these services as well and all the accesses to them and the residual benefits that they basically get, you have successfully provided financial services for the unbanked population as well. And unbanked basically does not necessarily mean somebody who is um, impoverished or coming from a lower class background. Unbanked can also basically mean people who are not eligible to get their bank accounts. Why? With digital innovation, what the beauty of it is that you can harness new to bank and potentially soon to bank customers as well. For example, if you have a 14-year-old who has a pocket money or access to or a side job or a after school work that he basically does, but he's unable to open a bank account, rather than have loose cash float around, if you educate him well enough, that customer not only at a young age gets financial literacy as well, but you can also include him into banking. And a 14-year-old customer eventually is going to grow up, and he is going to go to university, he is going to apply for a job, and he would basically grow in and potentially become a bank customer as well, who would use various other services. So what it has done is it has opened a paradigm for customer for financial institutions to compete with one another as well, because now they have to challenge themselves and provide innovative services that can combat traditional services as well. So not only would they be targeting people above the age of 18 or 21 or whatever the amount of age required to open a bank account, but they can now start targeting customers at a younger age, that and at the same time they can teach them. So when the person basically goes to his university, the chances of him to understand how savings product works or various fixed deposits, etc., and so forth, and what the point of a savings account is, especially when he grows up, allows him to enter into the financial industry or the financial market or ecosystem as somebody who is knowledgeable. Now, this is a service that has only recently been allowed because of the innovations in technology and uh, digital financial services. Whereas if you basically roll back before COVID, this was still a pressing matter. One of the things that people love about Islamic fintech in general is that if it's efficient access, it's easy to access, it's open for everyone, and almost any person can basically have the ability to access uh, various financial products along the life cycle as well, depending on how well that institution is attuned to providing that particular service. Flexibility and transparency, I don't need to say much around that, because Islamic finance has built its foundation around being transparent and flexible as well. Attractive costs and fees, especially around services. For example, if you take out financing, you don't need to pay interest. So that is appealing to a lot of other people as well, and everything is upfront. So you understand and you can calculate your own financial well-being. Financial inclusion and literacy as well. So one of the backbone foundations or the backbone pillars of Islamic fintech is that it always has had a passion around including and educating the people that use their products as well. And by doing this, what they've done is it's already easy. Traditional Islamic finance is already easy, but what fintech has basically done is has made it even easier as well, because of the new applications and the new UI, UX, and journeys that are basically being built around trial and error and evolution. So one of the things I personally feel that should also be included in this as well, that I think that what people basically love about Islamic fintech is the along with the access, it's the ability to demystify the overall prospect of Islamic finance, because technology allows you a step-by-step deep dive into your your financial services. As you basically use these services, they tend to get more intuitive, and you tend to learn more as you go, which is something that not a lot of organizations have been able to do it as well. So imagine if you take a concept of how Facebook or Kareem or Grab or Big Pay, etc., and so for all of these came to being. They all started off very simple. So when the customers were in the masses and they came and started using the one USP of this product, as they started adding more and more features and services to it, the customer started to learn as he went along with it. So now you have somebody, and this is one of the beauties of it. You have somebody who does not understand how to speak English properly, but is using an application with his bare knowledge of English, and he's able to access various things that make his life easier. Islamic banks help consumers adopt better financial habits by personalizing their digital experiences and giving users valuable insights into their finances. This is something that I want to basically touch base on, because Islamic banking has always been transparent banking. It tells you how your money will be used, what you're getting into, what products you're applying for, and what are the benefits that you will reap as you basically go ahead with it. So like I said, before you even sign your documents, etc. and so forth, for opening a new account or applying for a new product, you already are understanding what you're getting into as well. So there's no hidden terms and conditions, etc. and so forth, because by Sharia law, you cannot get into an ambiguous financial contract. And coupled with technology to basically fast track and boost this, the possibilities are almost endless as to how much you can go ahead with Islamic finance. One of the reasons why digital Islamic banking and digital Islamic fintech is a threat to traditional banks is that the competition is intensified. It costs far less to build a digital proposition and go into the market, as opposed to taking a physical concept and bringing it to life by a traditional bank as well. So you could have one bank competing against 5 digital Islamic financial services, and each one having a laser cut, laser focused USP, and your playing field is your market. So imagine you have a traditional institution, and that traditional institution is sticking to its current practices. Yes, that institution has not a complete market share. The only reason majority of the people go to it is because they have no choice. Now you've given them a choice, and it's easier. They don't need to come speak to somebody who's going to make them wait in long queues, etc. and so forth. And thusly, what happens is an exodus will happen, where all customers of traditional institutions that refuse to change go to digital institutions that choose to address a problem. The whole point of fintechs coming to the whole concept of actually fintech, regardless of being Islamic or traditional, the reason why fintechs basically came into being is that they came to solve a problem. They came to address and satisfy a need that customers were craving, but traditional institutions would turn a blind eye because they thought of themselves as monopolies. I mean, why wouldn't they? They said that there's no other alternative. Customer has to put his money somewhere, whether it's my bank or somebody else's bank, but he's still going to come to us. How can I basically remain competitive? By offering half-baked um, schemes and profit percentages, which honestly is nothing. At the end of the day, it doesn't matter how much you're helping your customers save. Ultimately, it also depends very strongly on how well you can make them stick. And I'll give you an example of this is because traditional institutions, they have a lot of bureaucracies, a lot of protocols, especially when you want to either apply for financial services or products, or if you want to basically um, withdraw or etc or close an account, etc. and so forth. With digital financial services and digital fintechs, etc. and so forth, it's super easy to open a account, close your account, move your money, manage your finances, all by in between an advertisement while watching a movie at the comfort of your home with your family. Reducing financial profit margins and service fees to remain competitive. Obviously, it costs far less to operate a digital financial institution than it does a traditional physical bank. So obviously, they'll be able to provide more competitive service fees, and profit margins would be more befitting and favorable for those who basically choose to invest with these financial products provided by these fintechs. Um, they would also, obviously, since you're moving from a traditional institution to digital, you're losing your deposits and your investments. A bank that was competitive before the pandemic can obviously see in the presence of a digital competitor a loss of the digital and investments. As I had mentioned earlier, customers are evolving at a rapid pace. Every customer has a mobile phone, every customer has internet on their phone. And with these available, why wouldn't technology companies and or other organizations take advantage of this and provide them what they basically need? Whereas if a traditional institution does not compete against this, they risk to be taken away. As you can see over the years, so many institutions have either shut down, merged, or been acquired by other larger institutions, mainly due to the fact that they cannot compete in a market that is dominated by agile and flexible and intuitive digital financial service providers. And one of the things that should make them, that I have spoken in the past as well, is that in order for institutions to remain competitive, especially traditional institutions, they need to collaborate with either fintech companies or technology providers that can allow them to remain relevant. Because at the speed that technology and digital financial services are moving forward, there is a very high probability that should they choose not to change, they could either be they could they have a straight up choice on the table, which is either eat or be eaten. And it ultimately depends on how they basically envision themselves. And especially if you look at the newer products that are coming out from non-banking financial institutions, such as buy now pay later players, organizations that are not financial institutions but offering instant digital financing. You can literally download 5 mobile apps and they would basically satisfy a lifetime of your financial service needs, as opposed to a traditional bank that would basically still stick to their old school guns. Creating a future-proof digital Islamic innovation. One of the things that we pride ourselves at Codebase is that we always continuously innovate. At our core, what we have done is we have created our digital Islamic ready Sharia compliant digital Islamic banking platform, or bank in a box, called Digibank, which provides customers and financial institutions who actually want to innovate as well, and understand that you need to be digital ready and you need to be having a digital first approach in order to remain relevant, not only in the market but in the industry as well for the time to come. Is that we provide them innovative means through being always mobile online, providing them with solutions that allow their customers to be mobile online and their services to be mobile online. We follow an always connected approach to ensure that a customer can bank anytime, anywhere. Uh, every engagement that is tailored for the customer using our platform is on a real-time basis and is personalized based on the demographic in an intuitive algorithm that is our own. We strongly believe in a data-first approach to ensure that we collect the right amount of data, consume it, um, process it, and then provide the most contextual engagements for a maximum benefit. And obviously, doing all of this with Sharia governance, risk, and security at its core, both on a technology level as well and a business process level. Our Digibank banking suite has supported and helped financial institutions thrive by enabling the value chain. We, through our complete API ready architecture, we support intuitive and flexible enterprise technologies, and we work together with institutions, both new and old, who are ready to take the leap into the future as well. We have developed this platform with 470 plus ready integration APIs that are available at the flip of a switch, and they're growing every day as we speak. So to ensure that not only is the technology that we have future ready as well, but that if tomorrow an innovative proposition needs to be made, we have the right tools for it. The platform is very simple. It's highly modular in construction, extremely scalable, can work both with legacy systems as well. It's database and legacy and infrastructure agnostic as well. So it can work with an existing institution. It can enable a hybrid cloud. It can work purely on cloud, on-prem, etc. and so forth. So we do not want, when we work with our partners and our financial institutions, we are ready with whatever scenario that we have present. Our platforms are continuously worked on, and the platform itself ensures and gives you the guarantee of superior performance and reliability, with security that is not only enterprise grade, but at the same time ensuring that it can stand up to the test of time as well. And because of our presence in multiple geographies and continents, we have ensured that the regulatory compliances are adhered both locally and internationally, and is flexible as well. One of the case studies that we basically used our Digibank platform for, especially in the Islamic digital banking space as well, is that we worked together with Kuwait's finance house to launch Bahrain's first digital bank. So just a little bit of background on this project was that the institution had a legacy infrastructure as well, but they had aspirations to go digital as well and offer digital financial solutions to their customers without having to rip and replace their existing technology. So our Digibank platform enabled that as well, not only making them the first digital bank in Bahrain as well, but with a go-to-market time of less than 3 months as well. And 6 months after go live, we collected the data from that, to which we said, and we understood that 77% of the increase of customer engagement was because of the Digibank platform for this particular project as well. We also experienced and saw 48% increase in a cross-sell ratio of cards and investments and loans and financing, an 80% increase in a frictionless customer conversion as well. So just to put it into context, every 100 out of every 10 customers that would come and try to open an application or open a bank account with our using our platform with the Kuwait Finance House, 8 of them would basically be guaranteed customers as well. And we have maintained the standard for the past 3 years. A 60% reduction in acquisition and onboarding costs, because in under 5 minutes, a customer has all his documentation submitted, he is vetted, and all the necessary checks have been done, and everything is stored in a database and as per the local regulatory protocol. Another digital Islamic banking proposition that we wanted to talk about was we were the first for Dubai Islamic Bank in Pakistan. We were the first digital onboarding and capital investment product for an Islamic bank, digital bank in the Asia region as well. As you know, our Digibank platform allows a standard of at least 80% conversion rate during the pilot stage, which also goes to say that customers from all over the world were able to open a bank account, and 80% of those customers made sure that they actually successfully opened a bank account. The same 60% across the board in reducing of acquisitions and operating costs because of our proprietary customer onboarding and acquisition module as well. And because of the ease of use and the agnosticity of our technology and the ability of it to integrate seamlessly with legacy technology providers and support the other third-party solutions as well, we were able to launch in 22 days an MVP with an investment proposition and digital KYC. One of the things that basically should stay key, especially for digital Islamic banks as well, and this is what we are working very closely towards, and we have ensured that we make it the most flexible and easy to use proposition as well, is our digital onboarding and eKYC module. What that allows is that it uses MRG scanning, documentation, and validation in a real-time basis using machine learning forensics. So 99.9% accuracy on documents being basically scanned. So no need for misread OCRs and having to re-edit it. The customer basically in less than 10 or 7 clicks, depending on how stringent the regulatory workflow is, can open a bank account within minutes. We also allow for video calls and selfie checks as well within our platform with a 99% face match authenticity as well, with multi-biometric verifications and customized KYC flows. One of the things that we wanted to talk about, especially about our Digibank platform as well, is that it allows institutions, especially digital financial institutions, to offer instant personal financing as well. Now, this can be applied not only just for personal finance, but can also work for Islamic auto finance, Islamic mortgages, etc., and so forth, depending on the customer as well. The engine is basically an intuitive um, credit scoring, credit underwriting, and finance management platform that has been developed from the ground up by us. And with with this platform, we have been not only able to allow organizations to disburse financing easily as well, but at the same time add additional increments to our customer acquisition portfolio as well. So one of the reasons why I feel that for Islamic financing, or not only just Islamic finance institutions, but digital banking, digital banks, digital financial institutions, whether you're conventional or Islamic, the reason why I feel that this is a product that should be taken on as an MVP apart from digital onboarding is that financial institutions, in order to remain relevant, they make their money from lending. They don't make it from deposits. So why not create a digital product that can seamlessly integrate into your existing proposition, or if you have a proposition, to create a digital arm to be able to provide lending services to your customers on the get-go. Because not only would this allow you to remain relevant, but you would basically be addressing a need. And instead of having to service an X amount of customers within an X amount of time frame, you can service customers at any point in time, anywhere you want. And instead of having them come to your branches, imagine if you have the entire population with your product in your hands, having the ability to apply for financing. It would change the paradigm completely. Thank you so much for your time, and I hope you enjoyed this. Please feel free to reach out to us, and we'd be more than happy to discuss in more detail.